so these $800,000 luxury short-term rentals that came fully furnished would generate you $120,000 a year in gross revenue. And when I did the math, I said, oh, okay, well, how much of that am I going to take home? What's the profit? And my agent was saying, well, probably about a third or 40% of it will be your profit. And I'm thinking, wait a minute here. That's a lot of money, right?
Welcome to the Xplor Show, where we dive into the worlds of entrepreneurship, real estate, and motivation. Each week, we bring you inspiring conversations with people who are exploring new frontiers and shaping the business world. Thank you for tuning in. Now let's get to the show. Hey, welcome back to another episode of the Xplor Show with Scott and Ryan. Scott couldn't make it today, but we have a great episode for you. We have a guest on who is a real estate investor, specializes in luxury short-term rentals. He is breaking into the hotel space. He's an educator. He's an author, and he's coming all the way from Southern California, Alex Sabio. Hey, Alex.
Hey, Ryan, how's it going? Thank you for having me here. I really appreciate it.
No, hey, I really appreciate you coming on. Been following you for a minute now. Introduce yourself. I know you started in healthcare. I think you're still in healthcare full-time, respiratory therapist in Southern California. And one day you decided to break into real estate investing. Kind of what brought you into that, and what's going on now? Kind of give us a little 2-minute spiel here.
Yeah, I wish I had a better story to tell people, like where you see some of these gurus who have been like successful overnight and all that. But to tell you the truth, that wasn't my story. I started investing in the early to mid 2000s, and I kind of knew that real estate was going to be our path forward. Started investing in long-term rentals out of state. I live here in Southern California, and at the time, homes were going for $250,000, $300,000. As crazy as that sounds now, I didn't think the numbers were working out at that time. So I was buying them in like the Midwest and all these other states. But I never really got anywhere. Those were, I always say, revenue neutral properties. They kind of just broke even, maybe made $100, $200. But if anything, they're losing money because every single time the tenants were moving out, every 2-3 years, they would damage the place, and I'd spend $5,000-$10,000 fixing it back up, pay commissions to a property management company, so on and so forth. Like I said, made a lot of mistakes along the way, and eventually I knew I needed to beef up the cash flow. And so there was going to be either two ways. Either I was going to acquire more units, had no idea how I was going to do that, or somehow cash flow more. Had no idea how I was going to do that either. And so I'm in healthcare. I work as a respiratory therapist. And for those of you that are in healthcare, know that the overtime is absolutely abundant. Like you could work almost every single day if you wanted to. So I was doing that, chugging along, maybe 10 years ago, and I hired a CPA, and she said, you know what, you should really consider short-term rentals. And I said, what the hell is that? I have no idea what you're talking about. But she says, hey, there's a really good tax loophole that we can, I guess, say exploit, so where you could keep a lot of your own money. Didn't really think about it. Kind of filed it in the back of my mind, and I tried to do multifamily, get more units. And eventually, I kind of landed on short-term rentals during the global pandemic, because that's kind of when they started blowing up. Realized I really enjoyed the hospitality aspect of it. Love the cash flow aspect of it and the tax benefits. So then we blew that up. We have a small luxury short-term rental portfolio of 6 Airbnbs. And that's the one thing I want viewers to know is you don't need that many short-term rentals to be financially free. I know a lot of people with just 3 short-term rentals that are financially free. And eventually, now we have a hotel. We've just been snowballing all of our profits, acquiring more and more assets. So,
wow, yeah, you've been busy. So you said a lot there. There's a lot to dissect. I want to take a quick step back. You're in Southern California. Sure. I meant to say this earlier. So my wife, and you mentioned there's all this overtime. My wife was travel nursing. We just settled down earlier this year back in Kansas City. but I was
Uh,
just in Long Beach, and we could
oh,
have did this in person, but
oh,
we never connected before now. So that would have been awesome.
yeah. She's probably at Miller Children's or something like that, like or one of those hospitals.
She was at Orange County
Oh, no,
Children's.
yeah, my brother works there. Yeah, we're
Oh,
almost
really?
every traveler. Yeah.
Oh, awesome. Yeah, they might have crossed paths. She really liked the
Mhm,
hospital. We loved Southern California. A big fan of San Diego more than
mhm,
LA. But
mhm.
so you had the chance, you said. So you said you started with the long-term rentals in
Right.
the early 2000s, correct?
Yes, like 2004. That's when I started.
Okay. And there were 300,000.
No, even cheaper, right? The one thing viewers need to know about me is I'm cheap as hell. And so I was buying them like maybe 80, 100, $120,000. Like I bought them in Durham, North Carolina, Houston, Texas, all over, like just
Yeah.
different areas of the country. Yeah.
Oh, okay. But the houses in Southern California
Oh, yeah.
were around
Yes.
that price.
Yeah, I remember the median price was around because I paid $230,000 for my first primary home. Even thinking like, hey, there's this bigger home that's $260,000, and I'm like, no, no, it's way out of my
Wait,
budget.
yeah.
Yeah, I'm not touching that.
And
And now
nowadays
think
it's
about it, you're like a fool because that was 1,000 square foot bigger in a nicer neighborhood.
and that would have been worth what now?
Uh,
1.2.
yeah, right, over $1 million. Yeah.
Yeah. Crazy. I mean, California it's a crazy state. Like it's so pretty and it's got everything going for it, but the prices are just like it's
They're insane.
they're insane. And I'm assuming that's probably a big reason why you started looking into alternative uh ways to make money, right? I mean, you want to stay in Southern California, you got to figure out a way to get more income.
Right. And that's what a lot of us here in California do. We invest out of state because the real estate doesn't make sense. I mean, if you talk about the 1% rule, you're buying a $700,000 home and the rents here are ridiculous, but you're renting it out for $3,500, maybe $4,000 if you're lucky.
Right.
You're still negatively cash flowing. And it's hard to really think, because it's an appreciation play at that point. But it's difficult coming out of pocket every single month. So
Right. Yeah. You have to be cash heavy or have something else with a lot of income to maintain that lifestyle. Cause if you're coming out of pocket, it's not sustainable if you're like a new investor.
okay, so true story here. So I bought a home next to a hospital I was working at, thinking I would rent it out to residents, nurses. This is before travel. I even heard of travel nursing. I had no idea because this
Right.
is maybe 15 years ago, and I bought it for $450,000. And it seemed like the country knew when I signed on the dotted line because they said, "Hey, let's just crash the market." Because I think I signed at the absolute top, and maybe 2 years later, that home was only worth $250,000. And this is back in
Oh, wow.
2008 during the recession, right? And it was tough. I mean, you're talking about renting something out for $2,000 a month because that's what market rent was back then, and your mortgage was $3,200.
Holy
And
cow.
right, right. And so that's like I don't want to deal with that again. And so that's how I landed on short-term rentals because the cash flow was so much more at the end of the day, if you're cash flowing 3, 4, $5,000 a month, it's easy to solve problems. But when you're
Right.
negatively cash flowing $1,200, $1,500 a month, you tend to do stupid things like you go over there and try to do the repairs yourself
Mhm.
instead of hiring a professional, or instead of hiring a property management company, you hire them or you do it all yourself, and you get awful tenants, right? And there's all these things that you don't know, and you're learning along the way, so you make a lot more mistakes. So
So did you take basically a decade off before you started investing back into real estate in the short-term rentals?
yeah, I started dabbling in stupid stuff. I started doing like penny stocks, and that didn't work at all. But luckily, like the real estate game, I mean, you could be an awful real estate investor if you hold it long enough.
Mhm.
You're gonna be okay. Like I had all of these long-term rentals that I bought for on the cheap, maybe $100,000 on average, and then 10 years later, they were worth $150,000. And then the tenants were slowly paying down the mortgages for me.
Oh,
and you
nice.
learn like, hey, I maybe if I get better insurance, maybe if I refinance, get a better rate, all of a sudden you start building up a little bit more cash flow. So yeah, I hung out a lot of those properties. Eventually, I was cash flowing maybe a couple grand a month on all of my long-term rentals, but I knew a couple grand. It took me a long time to get there. And I knew that that didn't change my life that much, right? Like
Right.
I wasn't going to be able to retire from this. I wasn't going to be able to move to a different house or anything like that. And I wasn't going to be able to, I have 4 kids. I wasn't going to be able to pay for college for all of them. There's absolutely
Right.
no way that I was going to do that. Either that or work overtime every single day. And that wasn't going to be sustainable. So,
Right. And then you're not, if you're working overtime every day, like how much of a father are you being? I mean, if
right.
you got to do, I'm not hating on people that have to do it or,
Yeah.
they don't want to take a risk with real estate. They just want to work all the time. Do what you have
Hmm.
to do. I want to be involved in the kid's life as much as possible. I'm sure you do too.
Right. 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 Wasted
So,
a lot of years there. I didn't know, right? If I had to go back and do it, I mean, that's one of the regrets I have that I wish I was there more. The one thing is I sacrifice sleep like crazy. I work night shift. I'm sure, I don't know if your wife worked nights.
long time.
We don't sleep. The first night you're working, what do? We stay up 24 hours.
Yep.
And then our first day off, we don't want to sleep because we want to spend time with our kids. So
Yep.
we do sacrifice a lot of sleep to be there.
Yeah. And it's tough and it's tough on your body. Like this assignment, she's working here locally, but she's back on days and her mood's better. Uh, I mean, her sleep is more normalized. So it's just everything like she has more energy. She's in a better mood. And the nights is tough. I give all the props to those night healthcare workers, first
Yeah.
responders, whoever works nights. That's a tough
Right.
deal.
Yeah. I liked it. I did it for 17 years.
Oh,
You don't
wow.
realize how tough it was on your body until you stop. Because I
Right.
was I was forcing myself to sleep like 2 to 4 hours of sleep. I don't recommend that to anyone. Just putting that out there, and everyone out there is going to call me an idiot and say the studies prove that that's not healthy. I knew it, but I was like, I'm going to sacrifice myself because I want to be there for my family and make money at the same time. So
Yeah, you're in the grind. Well, we're kind of getting off of a tangent here. So let's reel it back.
sure.
You got these long-term rentals. You're ready to get into the short-term market. They're luxury. And I looked at your properties. They're in Smoky Mountains and Gulf Shores. Some have
Yes.
hot tubs and pools. Um,
Right.
how did you acquire those?
Well, I was working my butt off at the hospital, saving up as much money as I could, and I was looking to buy apartment complexes. And when I was analyzing those deals, like the cash flow just didn't seem great to me. And this is in
Mhm.
the middle of COVID, and I'm just starting to get into the commercial asset. And if you're brand new, like nobody wants to speak to you, nobody gives you the time of day, nobody wants to partner with you.
Right.
And so then I called different agents and they said, hey, so these $800,000 luxury short-term rentals that came fully furnished would generate you $120,000 a year in gross revenue. And when I did the math, I said, oh, okay, well, how much of that am I going to take home? What's the profit? And my agent was saying, well, probably about a third or 40% of it will be your profit. And I'm thinking, wait a minute here. That's a lot of money, right? And at the time, I was buying homes for like 60 to $80,000 in Cleveland, Ohio, cash,
Oh,
right?
wow.
And so then she was telling me, well, that doesn't make sense because you could buy these luxury short-term rentals with just 10% down. And I said, okay, I could buy a home in Cleveland, Ohio that's going to cash me $400 or $500 a month, or I could buy these luxury short-term rentals that will cash flow me. The first one wound up cash flowing me $60,000 the first year. And
Holy
it
cow.
gave me a huge tax break to where I paid zero in taxes. And so once you get it, you're like, oh my gosh, I have this life hack and I just want to keep continuing it. So eventually we just start snowballing all of our profits. We don't say, we saved every dime, all the money we saved on taxes, we just kept buying more. And then eventually we looked at our long-term rentals like, wait, these things are only cash flowing us two, three, four, $500. there's 50, 60, $100,000 in equity there. Why not just sell those and buy more luxury short-term rentals? Because it's something we enjoy doing. So
Wow, that's so I was actually going to ask you because you said in a podcast that your wife was able to retire from her W-2 job within 3 months, basically, of the first short-term rental. And you kind of already
right,
answer my question with the amount of cash flow. But let's
right.
back up to the agent telling you about this potential investment. Was there not any like, this sounds too good to be true moment?
Yeah,
And then what
yeah,
did your due diligence look like? Did they give you a list of like, hey, call these people for like
yeah,
reference, or what
yeah.
did that look like?
Well, at a certain point in your life, you're gonna have to take a chance, right? And something that I was doing wasn't working. It was working okay, but I wasn't gonna get anywhere. I was gonna work 30 years to acquire all of these long-term rentals. And at that point, why even do it? Because you're gonna work 30 years at your job and get a pension anyway, right? And so
Right.
I started just at a certain point during COVID, when all of us were locked down, I just started reaching out to as many investors, whoever wanted to speak to me. I went on the forums and I put out a rookie question out there and got a lot of hate for it. I said, "Hey, where's the best place to invest in a short-term rental?" At that time, it was like I was just early, like diving in, and it was weird because everyone kept saying the Smoky Mountains of Tennessee. I'm like, where the hell is that? I have no idea where that is. I've never even heard of it. I live here in Southern California. And it was weird because everyone kept mentioning it. And I said, well, okay, so if I'm going to invest in the Smoky Mountains, who's the best agent in that market? And it was crazy because everyone kept mentioning this name. And I said, okay, let me reach out to her. And at the time, nobody was buying homes. It was like this weird lull where like people were scared the economy was going to fall off the cliff. And she said, I actually have a listing right now. It's been sitting on the market for over 30 days. And I said, okay, Avery, I got this weekend off. I'll come out and visit you. And so I went and visited, and then I was there and I was looking around. I said, "Oh my gosh, I understand the market now. There's so many visitors here." And at the time, this is the middle of COVID. Nobody's wearing masks in Tennessee, and I'm in
Oh
Southern
yeah.
California. Everyone's masked up, right? I'm like, "What the hell is going on here? Like, what is this place?"
Different
And then
world.
completely different world, right? And then the national park is there. You have all these rides, museums, and games for kids. And I understood the market. And so I did my market research rather than just looking on Zillow, because we all do that. We go on Zillow, we try
Mhm.
to analyze these deals. But when you get out there, step foot, I understood the market. I said, oh, this is a gold mine. Because even me, I booked an Airbnb and it was like $400 or $500 a night. And it wasn't even like the nicest Airbnb,
Right.
right? And it was far away. And then when I looked at the her pocket listing, she was like, it was brand new, all the furniture was new, location was better. And I said, well, if I'm paying this much for the Airbnb, crappy Airbnb I'm in, like someone would pay a lot more for this one. And I ran the numbers and I said, oh, it's going to generate easy what she told me, $100,000 a year. So I
Wow.
bought that property for $625,000. It generated $130,000 to $135,000 per year the first 2 years.
Wow. And you put 10% down on that one?
So close to 20. Like
Okay.
I did mess up. I had some issues with my financing when you're initially new. And at the time, the financing got extremely conservative to where I had to put a little bit more money down. But a lot of people were putting 10% down. It was just this weird time period that happened like within a period of 2 weeks. And at a certain point, you start saying, I'm going to do whatever I can to get this property. And then that's at that point when I started pulling money and equity from my other properties.
Gotcha. Cool. Very well. I mean, those numbers are insane. I mean, it's kind of makes it a no brainer. It's funny you said that you didn't know where the Smoky Mountains were because it's people in California. I feel like the East Coast is the same way. Me being a Midwest guy, it's a little different. So it's basically California, New York, and some know about Florida, and that's about
Yeah.
it.
Yes, right, right.
But so that's awesome. So you get that one, it's cash flowing, and then do you buy a couple more there, or when do you start looking at like other markets? Why'd you look at Gulf Shores and why not just stay in the Smoky Mountains?
I really liked the Smoky Mountains, but at the time it started heating up like crazy.
Oh,
And it
okay.
was like on fire. Like within like 6 months of me buying it, the prices were skyrocketing. The world started opening up slowly. And then our average daily rate started jumping and occupancy started jumping. I like more turnkey, brand new stuff. And so what happened was I was buying them brand new and it was taking the builder forever to build them. And so my next one we acquired like 8 months later. I think it was 8 months, somewhere around there. But it was supposed to be a little bit earlier. And at that time, I put money down to purchase another one, but he was taking forever to build because so many the requests that he got were through the roof. And so at that time, I said, well, the Smokies isn't working. I wound up just networking with so many investors. And that's the one thing I would recommend to people is just get out there and just start talking to investors. It's not going to take any money at all just to send someone an Instagram DM or on Facebook or join a Facebook group and just start talking to different investors. And at the time, I created a lot of online friends and a lot of them were in Gulf Shores. And I said, okay, I'm about to sell one of my properties because actually I think I was going through an eviction. And I said, let me just get rid of it. I have some money to 1031 exchange. Let me take a stab at Gulf Shores. And it's always been a dream to own a beach home. Like I never thought I would own something close to the water. And here was my opportunity to do so. I didn't care what beach it was. I was just realizing that dream that, hey, coming from where I came from, I actually have an opportunity to own this property. So,
Nice. Yeah, that's, I mean, a childhood dream. I mean, we went on beach vacations as a kid, and you're just always told it's like, oh, those are only for like multi millionaires. Like,
right.
and not
Yeah.
saying you're not one, but like, that seemed impossible to see, for you as a
Yes.
kid, right? Kind of the same thing.
Even as a grown adult, it seems impossible to own one of these. Like, what the hell are these people doing? Like, I work at a hospital. I feel like I make good money. I work with doctors. I feel like they make good money. But none of them are owning beach homes, you know what I
Right.
mean? And it's just like it's this limiting belief in your mind that everyone's like storing their money or making so much more money, but there's other creative ways to acquire those properties. So
Do you ever feel like you're living kind of two lives since you still work the W-2 job, but then on the outside, you got all these properties that are, bringing in all this cash flow?
sometimes because every time I'm at the hospital, like I probably a dozen times a day, people say, "Hey, man, I thought you had quit by now. I didn't realize you'd be here."
Yeah.
So it definitely is. I still enjoy working there at the hospital, and I think I'm still too in the weeds to really take a step back and look at that because I'm just in grind mode right now, and I just
Gotcha.
got my head down and I'm grinding, and I'll look back in retrospect and see what I did, but right now. Um, I can see that, but I'm just grinding it out right now.
Gotcha. Makes sense. So there's one more thing I wanted to hit on with the short-term rentals before, because I want to hear about the hotel deal too, because that's a whole new sector for you. Here in Kansas City, they just passed new regulation
I
that
saw that.
in residential neighborhoods,
I
you
saw
can
that.
you cannot have a short-term rental if it's not your primary residence. So the
Right.
current ones that are registered are
Hmm.
going to get grandfathered, it sounds like, but there's not going to be
Yeah.
any new in residential
Yeah.
areas. Is that something you worry about with your rentals? Is there been any, do you watch the laws and stuff that are trying to be pushed
Yeah.
in your areas where
Yeah.
you're invested?
Sure. Well, whoever has a short-term rental in Kansas City that's already registered, you just scored. Because now all of a sudden, hopefully they grandfather you in, and if you ever sell that house, now you're selling a business. And it's weird because you'll see a 3 bedroom, 2 bath that's a short-term rental, and a 3 bedroom, 2 bath that's a primary residence. Same exact home, but if one could be a short-term rental and the other one isn't, one will sell for so much more. Right. Or sometimes there'll be like I know, and I think in Charleston where they blocked off a block where the homes that are located within this specific area are worth so much more than the ones that aren't, because these ones are, I mean, they're so much more valuable, and the demand for them to buy, I mean, it's through the roof. But that's why I invest from Southern California, 2,000 miles away, because the areas that I'm in, like, for example, the first short-term rental I bought was in a community of 61 different homes. I didn't know this until I visited it, even after I left it, but every single one of those homes is a short-term rental. Like, there's
Okay.
no garage, and the builder built it specifically for short-term renters. There's a community pool. Like, there's nobody that lives there. They're all vacation homes. And then the three that I have in the Smoky Mountains, Tennessee, they're in short-term rental communities. There's no primary residences there. So even like if our guests are a pain in the ass, or the next door neighbors are a pain in the ass, I mean, they're gone within the next 2, 3 days, right? And so in those communities, like, tourism is so important. That's their lifeblood, right? That if they started banning short-term rentals, it'd be like, it's almost like if I told you, hey, Las Vegas is thinking about getting rid of gambling. Like, what are you talking about? That's like impossible, right? They're gonna
Right.
just, that's the stupidest move out there. And so that's the way I felt in Gulf Shores. There's these communities that are short-term rentals, so I invested in those communities. For somebody that wants to grow and expand, you want easy money. You don't want to be worrying about fighting the HOA, fighting the city, fighting your neighbor. If those barriers are gone, I feel like you grow so much more faster.
Yeah, it sounds like maybe you kind of had your finger on, what's happening with the changes in the cities. Cause I know San Diego last year was basically it's putting in new regulations and stuff to try to dial back the short-term rentals because it was just turning into a huge hotel. Like,
Right.
is pushing all the working class and everything out because people are just
Out there.
buying them up and making them short-term rentals, which,
Right.
I see both sides. I'm a resident somewhere, everybody is. And it's
Yeah.
like you don't want your neighborhood to be a hotel and everybody
Right.
partying all the time. And if
Right.
you work in that area, you want to be able to live in that area.
Right.
Um, so yeah, it's good on you for you bought in areas where it's like this is what this is for.
Right.
People who own in cities that things are going to change. I mean, I hope you didn't overpay thinking it was going to be a short-term rental the rest of its life, and
Right.
hopefully you can make a shift, make it a long-term. And they define short-term rental as 30 days or less.
Right.
So you can still do short-term, like 3-month leases where you get a little more premium, but
Right.
you're not going to be able to be on Airbnb for weekend stays.
Right. I think that's the next shift. I see a lot of people going into the midterm rental, and it'll work there in Kansas City, or there all these areas where they need workers or travel nurses or whatever it is. But I just don't see myself going back to long-term rentals, because I see the potential, and the amount of money that you make as a midterm or short-term rental is so much more than a long-term rental. And to be honest with you, I'm enjoying it a lot more doing
Yeah.
it. So versus having a long-term rental where it's just frustrating making $100 a month or something like that, and then having to fix a water heater, taking all your profits or whatever it is. So
Right. So your properties you're in the vacation rental, you're in the hospitality game. And so was
yes.
that like an easy transfer for you to let's go into the hotel stuff?
Yeah.
Is that what attracted you to the hotels? Because you're like, I'm kind of running a hotel already.
You're running the world's smallest hotel with one guest, right?
Right.
Already. So the thing is, for scale, you start thinking, well, how do I make this easier, and how do I acquire more properties? And like, I play Monopoly on my app. I still play it every day. And so in your mind, you're thinking, how do I trade up and get even bigger? And so at a certain point, I focused solely on networking for the past 2, 3 years. I'd have these real estate meetups online all the time. I'd go to one. I'm actually hosting one tomorrow here in Santa Ana, California. And I just started networking and meeting all of these people that were doing amazing things. And I just started partnering with or thinking about partnering with different people, and trying to do something big. And I think life is just too short Like, why not just go for it and see where it goes? Right. And so eventually I met three other people and we partnered and created a fund to where we're going to buy hotels and short-term rentals. And I enjoy it a lot better. I mean, as a short-term rental operator, you have every single hat. Like you're the property manager, you're speaking to the guests, you're doing the acquisitions, you're doing the funding. But if you work together as a team, we all have different roles, and you can do bigger things and accomplish so much more.
Nice. So the hotel you bought is 76 units. Um,
Yes.
is it a where is it? And then B, is it like a franchise deal where it's like it's a Holiday Inn or like a
Yeah.
something like that? Or are you guys doing a whole new brand? How does that? I don't know how that works, to be honest.
So one thing I'll tell you is the viewers just always be open, right? If you told me 3 years ago I'd be investing in Tennessee, I'm like, what? I don't even know where that is on the map. Or a beach in Alabama, I would have said, Alabamas have beaches? Like, what are you
Nice.
talking about, right?
That's
And so
hilarious.
the hotel is in Northwest Arkansas. I still can't draw the state. I don't know what the state looks like, right? I have visited there 3 different times, but a couple of my partners said, "Hey, we actually really love this area because the home of Walmart, the Walmart headquarters are here, and they have vendors everywhere, and there's a ton of business travel, and they're pouring millions of dollars into it." Now it created a lot of competition, right? Because a lot of people are going to look in Northwest Arkansas,
Right.
and so it's a 76 unit hotel. It was a microtel by Wyndham. And actually, what happens is, I mean, hotels are a lot more work, and some people just don't have the appetite for it or don't realize how much more work it's going to be. And so this guy just wanted out. He likes more passive deals. And so he put it up for auction. Like, okay, you could buy hotels at auctions. I had no idea, right? And so we wind up winning the auction. We're like, oh, what do we do now? And so we got it for $3.6 million. And I knew our market research told us it was easily worth well over $5 million because everything was selling for $81,000 a door. Turns out the appraisal came back at $6.5 million. So here we are, $3 million equity day one, right? And so we put initially this thing with auctions, you have to put 10% non-refundable earnest money down to acquire the property. 24 hours. Hey guys, you got to wire $360,000. Like what? Like,
Yeah.
but at some point, you got to take a chance on yourself. If you did enough due diligence, you knew that it was going to be worth so much more. Not only that, it cash flows every day. Today, you're like, right, like when we're 100% occupied, those things generate easily over $10,000 a day,
Oh, wow.
right? Yes, especially in that market where there's tons of workers that are staying for 2, 3 months at a time. And not only that, there's a lot of business travelers, there's a lot of mountain bikers, and they're spending so much money in like building museums that it winds up being a no-brainer. So yeah, we acquired that and we've been a little over a month now. I really enjoy it because I'm not dealing with the guest anymore. Right? I have staff that takes care of all of that, staff and maintenance people that take care of everything. So I'm not having to, I'm not in the weeds, So to me, the hotel operation, if you're working as a team and acquiring assets that generate enough income to where you could hire staff, it's so much easier. So.
What is and for people that haven't been in Northwest Arkansas or Northern Arkansas, really, it's beautiful. Very pretty state.
Mhm.
Where he's talking, Northwest especially. Lot of outdoorsy stuff to do there. What's your role?
Yeah.
Are you managing the employees? I mean, I'm sure you have a general manager or something, but um,
Yeah.
what's your day to day? Are you messing with it daily?
Yeah, I'm still trying to figure that out. Tell you, no. So we all have our different roles. So one guy loves the operations part of it, so he's doing the operations. One person loves finding the deals, and she negotiates it. She's a former attorney and writes contracts up very easy. I would put emojis in. Like, that's just not my thing. And I would sign everything like an idiot and not read through it, right? And I would just docu-sign through stuff within 10 seconds. That's not my role. And then a couple of us, so my role is more social media, getting our name out there and doing a lot of the fundraising, right? And bringing awareness. And the people that invest with us, I talk to the investors. It's an investor relation. So you need all of these different people on your team. And there's a lot of, crossover there. Like the other person might do some fundraising and I might go over there and do some stuff, so, but we kind of stick to our lanes for the most part. But yeah, that's pretty much my goal, just getting it out there on social media and talking about it and putting videos together and fundraising.
Wow. It sounds like you got a great team, kind of, it's,
Awesome.
partnering with the right people, and
Yeah.
everybody kind of knows their role.
Yeah.
I mean, you're halfway or more than halfway there at that point, right?
Right. There's zero chance, maybe 0.1% chance I would have been able to acquire it myself, even if I had the money. And at that point, the bank won't even lend you money because you don't even have experience in the space. And
Right.
then the fact that you don't even live close by, the bank's not going to lend you money. So, and not only that, you have to have so much liquid assets to be able to acquire the property. And so you have to work together as a team. And I love our team. So.
That's awesome. So I wish I would have screenshotted this. Somebody on Twitter the other day said, I can't remember who it was. I'm on a bunch of real estate Twitter stuff, but he said, big deals are easier to do than small deals. So do big deals. You've done both, being in the long-term rental game in Midwest towns and now hotels. Do you agree
Yes.
with that statement?
I do. I mean, I wish I would stop being a cheap ass and buying these $50,000 homes because there is so much more of a headache. Going cheaper isn't a cheaper house doesn't mean it's cheap. It's actually going to be more expensive because at the end it's going to cost you time, which is the most expensive thing. And you're wasting time like buying these $50,000, $60,000 homes. I mean, imagine if I teamed up with people earlier on and said, hey guys, I have $100,000. Let's try to do a big deal together. And if the cash flow is enough, we could hire staff to where, we could keep growing. 100% agree with that. Do I regret doing all those crappy deals? Absolutely not, because I had to get to the point where I am now.
Right.
But I do recommend people like, hey guys, it's limiting belief. You don't have to go through all of that stuff. You just have to find the who, not the how. Find the people. Find the people, and you're going to do very well.
I like that. Find not how, who.
Yes.
I mean, for mentoring or partnering, or I mean, it's so many things. It's your network is your net worth, right?
Yes. Yes.
And it sounds like you're finding that.
Right. I definitely see the focus, especially short-term rental operators. We want to know all the weeds, like, hey guys, what's the property management software system? What's door lock deeds, like all of these technical issues. But the thing is, it's like, are you looking for who? So that way you can do bigger deals and grow. Because right now you're in the weeds, like all of the extreme detailed stuff, we're all focusing in on it. And don't get me wrong, those things are important, but they're not spending any time on really networking and partnering up with people and to do bigger deals because it's going to be easier.
Right. That's interesting. You would think doing those big properties and stuff, it'd just be so complicated. It's like, oh, we're going to need a team of lawyers. And so I thank you for sharing that story with me and the listeners, because I mean, I'm learning so much from our conversation. So let's go into what's next. What's the next big deal? What are you guys after? What's on your radar?
Well, it's a smaller deal. It's a 9 unit. It's right next to the brand. Okay, so here's the reason why we're in Northwest Arkansas. It has everything to do with Walmart. And so Walmart is pouring, that's where they started. And they're pouring so much money in the region. It's in Bentonville, and they're building a brand new Walmart headquarters. And we got a set of 3 triplexes that are walking distance. And this Walmart headquarters is 350 acres. It employs 18 to 19,000 people. Not only that, there's a concert area that's zero point 0.2 miles away. There's a eating food place area that's zero point 0.2 miles away. So it's going to make an amazing short-term rental and midterm rental if we wanted to. And the area is just like investors are buying lots and old homes up and tearing them down and putting these like luxury condos and townhomes up. So you definitely, I mean, with the naked eye, you could see the path of progress. I mean, you don't have to do much research. You just look around, you're like, oh, they're buying up all of these ugly homes and just tearing it down. So that's the next project. We close on that next month. That one's more
Congratulations.
term play. Yeah, thank you. Thank you. We got to see it through. So
Right.
hopefully, fingers crossed, anything can happen. But we absolutely love that area. We have a fund that we do purchase like more short-term rentals and hotels. So we just tried to win, or we were bidding on two other hotels yesterday. They went way above our price point that we were comfortable with, so we didn't pursue it any further. But we're looking. I know a lot of people worry about the interest rates, economy, all of this. We're focused on buying good deals. If it's a good deal now, it's going to be a grand slam a year from now or 2 years from when the economy stabilizes.
That's great. Yeah. So that's a good quote there. I'm going to cut that one. Uh, so, we need to start wrapping up here. What else are you working on, or what do you want to get out to the masses where people can find you, stuff like that?
Yeah. So I'm a healthcare worker, and during COVID, I saw a lot of healthcare workers that were burnt out. They were burnt out before COVID. It was crazy, right? And COVID just put a flashlight on what was wrong with healthcare. And what I did is I just started talking to everyone and anyone out there all my coworkers, nurses, doctors, everyone. I said, hey, it doesn't have to be this way. What if you did this job for the love of it and didn't really need the money? And so I created a group called Healthcare Professionals Investing in Real Estate. It's on Facebook. And if you're a healthcare professional, join that group. I add daily tips every single day, like, hey guys, you should think about this, try this software, do this. And that's all for free. I just really enjoy seeing other healthcare professionals become financially free because a lot of them are burnt out. And I've definitely helped a lot of coworkers, and they walk around completely different because they have, they're more financially secure. They're not having to stay over 4 hours. They're not having to pick up the extra shift. They're not having to do the on-call shift anymore because they don't need that money. They're just there because they enjoy it. So anyway, just join my group, Healthcare Professionals Investing in Real Estate. Love growing that community. So
That's so cool. And, as, excuse me, my wife's a nurse and she comes from generational nurses. So I think that's so cool that you're kind of creating a community where it's like you have other options, and we appreciate the healthcare people, we all do. And it's so cool. You're providing a platform and kind of showing them the path of financial freedom. It's like, you can still do this job you love
yes,
and not be stressed, or maybe do it part-time. It's, you
right.
have options. So,
I mean, look at me. Like we are financially secure, and I am still working full time. But at any day of the week, I could tell them, bye, Felicia. Like,
right.
management changes because I actually like the manager that's in place right now. But if there's different regulations, or, hey, guys, AI is coming in and taking over some of your work jobs or whatever it is, I could easily walk away and I could go teach, I could go do whatever. So I just want people to have options out there. And I feel like people are stuck in healthcare because they're high paying jobs. They're high paying jobs with good benefits, but they're stuck. That's the problem. And we
Right.
need to get people unstuck.
Wow, that's great. Well, Alex, I really appreciate you coming on. I'll link all your information in the description below. Everybody, feel
Yeah.
free to reach out to him, join the group, especially if you're a healthcare professional. Bunch of resources. He's got a book out. Thanks again for coming on. And thanks for everybody for listening to the Xplor Show. Please like and subscribe. Leave us a comment wherever you listen to podcasts. And as always, we'll catch you on the next one.